poll. Our poll was 2.1. It's come in at 2.04. And it's also lower than the WPI, the wholesale price index that came in last month for June, which was 3.36. Now, just a word about the background. All of last year, up until November, the WPI was negative. It was negative because a year ago it was very high because of the Ukraine war, with so many, everything from iron ore to edible oils shooting up. That made it negative. Now we are normalizing. And as we normalize, you are getting a small positive number. This will continue for some time. After that, we can see a sharper rise, perhaps, as we go towards the end of the year. But the 2.04 is still a good number because it's lower than the poll and lower than the June WPI. But the details, some of them are looking a little disturbing, with potatoes, onions, and such other inflation numbers still coming in a little higher. Let me get to the expert immediately. We are joined by Aditi Nayar, the Chief Economist at ICRA. Aditi, what have you made of the overall number? You think the WPI inflation will now start a slowing? I mean, it won't rise because of what? Chinese disinflation and such other factors?
Thanks, Lata. So today's number is a tad below our expectation as well. We had penciled in 2.1%, as you just said, for your poll. And the reason for the month-on-month deceleration is primarily the base effect related to food prices, just as we had discussed for the CPI. But also what's turning out in July, August are some other global factors that are possibly going to lead to lower uptick in the WPI going ahead after the base effect unwinds. So we've had crude oil prices softening, we've had commodity prices softening over the last couple of weeks, although the INR has depreciated relative to the USD. So we'll have to see how these factors play out over the next couple of months. As of now, we were looking at the WPI averaging just a little over 3% for the full year. And rising, post the base effect normalization to a range of 4 to 5% in some of the months, particularly in Q4.
But Aditi, the bigger thing I wanted to ask you is, are we going to undershoot the Reserve Bank's forecast even on CPI? The CPI number for July also came in at 4.54. The expectation was that it would, 3.54. The expectation was it will come closer to 3.7. And now the food index is up just about 2.7 on the month. If you compare July food inflation, it is 3. And now looking at WPI at 3.5% compared to 8.6 in the month of June. Manufacturing products index month on month is down 0.1%. So you fuel, manufacturing, food, all three are down month on month, and the CPI also undershot. Are we headed for a lower than expected CPI for the full year as well?
For Q2 we think so, but not necessarily for the full year for the CPI as compared to the RBI and the MPC's forecast. So we do think that Q2 there will be at least a 20 basis points undershoot as compared to the MPC's latest estimate. But for the full year, we're still around 4.5%. The disaggregated trends for food prices are actually quite mixed in this month when we look at the data that we have on the high frequency food prices. And overall, vegetables of course tend to be highly volatile. So we'll have to see how those settle down. And monsoon is now above normal. Let's see if there are periods of disruptive rainfall going ahead, or if the rest of the monsoon season is quite well distributed and fairly favorably distributed to let us end up the season with the Kharif output being on the higher side, which should be good for prices going ahead. But as of now,
so anything stand out for you? Anything stand out for you in terms of EBITDA margins of corporates because of the falling manufacturing index? Should we expect anything positive for the for corporates, or even negative? If their final products are going to see lower prices? And separately, will you advance the Reserve Bank rate cut expectation?
So on the EBITDA margins, we thought they would be less supportive to the overall GDP growth trend for Q1. For Q2 and Q3, possibly, this will be a bit of a tailwind. Let's see again if it sustains. And Q3, what we're hopeful of is that after the Kharif cash flows come into the farm pockets, if the cash flows are favorable, then there could certainly be pent-up demand that pushes up rural consumption during the festive season. So we could end up with a very positive mix of factors in Q3 that could really push up the Q3 GDP growth.
All right, so maybe you are counting our chickens too quick, counting the eggs too quickly. Thanks a lot, Aditi Nayar, for joining us. The basic message is, like the CPI, the WPI, wholesale price index, is also a little lower than what the market is expecting, and very importantly, much lower than what was June inflation in both in food, fuel, and in manufacturing products, which is an important input when we analyze corporate EBITDA and EBITDA margins in coming quarters.
Okay, all right. So maybe a positive lagged effect is what we could expect, Lata, from that. Thanks very much for joining.